the Nigerian equities market has seen sustained profit-taking on key stocks by investors. Analysts say they expect mixed sentiment with a bearish bias this week. And I have Abdulateef Grillo, an investment research analyst at Meristem Securities, joining me to gauge investors' sentiment. Thank you so much for joining us, Abdulateef. Let's start off the conversation really now with the performance we saw in the equities market just last week. 3 days of gains, and then later this week we started up with bearish sentiments. It's been quite an interesting tussle between the bears and the bulls. Investors lost 30 billion naira just yesterday. Your thoughts on what's playing out?
Yes, thank you very much for having me. And while we have had bearish sentiment linked into Nigerian equities market for a while now, in the last 2 weeks, we have seen the market close up 0.63%, 0.73% respectively. And for 2 weeks ago, it's quite arguable that the performance in the market was caused by buying interest on some heavyweight tickers, particularly Ethel Africa. Well, for last week, the mood in the market seemed to be much more positive. We saw investors take position on some heavyweight tickers like Boa Cement, Boa Foods, Stanbic, and Waco. The mood across sectors was still very much positive. We saw the market rate at 1.91, and even across sectoral indices, all the indices closed up, save for the insurance index, which lost about 0.54% week on week. So the mood in the market last week was still very much positive compared to what we have had in the market for a while now.
And one of the reports we have in the market is today. Now we also have GT Holdings Company Limited releasing its financials. We see profit before tax rising 11%. This is hitting about 103.2 billion naira. PZ Cousins, on the other hand, is also nullifying the index, and it's investing public that, hey, there's going to be a slight delay. What's playing out here in terms of the banking stocks as well before we now come over to the telecommunication sector?
Yeah, I would like to state that the general sentiment around the banking stocks hasn't been very positive for a while now, and it's quite possible that what investors have also been waiting for in recent times is for these financials to come out, and maybe they can act on that. We note the like of Stanbic when they released their financials. We saw that
Yeah.
that buying Stanbic has been between 12 and 15% since they released their financials. So on GTCO released its financial statement. I think that was yesterday, and we saw that increase in gross earnings, about 15% increase in gross earnings, and this came from both their revenue sources, both income and non-interest income. And while we saw that increase in gross earnings of 15%, the profit before tax increased by about 10% also. There was actually a decline in profit after tax. Their net income declined by about 2%. And this was due to the jump in the tax that they paid during the period. Tax almost doubled from about 13 to 25 billion paid during the period. And I think this is due to the removal of the tax exemption on treasury instruments, which they have enjoyed for a while now. So the increase in tax is not particular to GTCO. It's actually across board
Board,
companies
yes.
in the banking sector. So what actually the ticker has gained about I think 0.2% since yesterday with the retail finance gained about 0.2%. But then again, if we are seeing a more positive result, maybe a growth in bottom line, maybe that would have spurred some buying interest. We note that particularly for GTCO, the sentiment around that stock hasn't been very positive. It has lost about 23% year to date. And like I said, maybe investors have replicated what we saw play out on Stanbic on GTCO if the result was very much more positive than that.
Okay, now, Abdulateef, let's shift our conversation now towards the telecommunication sector. One of the biggest news we also have to deal with and investors are looking towards is also the suspension of the tax increase for phone calls and then data. How is this also affecting telecommunication stocks? And let's also look at some of the players within the industry there, from Airtel to the likes of MTN.
Yeah, okay, thank you very much for that. The news on the suspension of the 5% proposed tax on telecommunication services also came in yesterday, and this is quite a very good one. I think it's even more for the consumers of the services than the corporates. Very good for both of them, but more for the consumers because the proposed tax, what it have meant was increase in the cost of telecommunication services. And looking at the way telecommunication services, the importance of the services is almost becoming a necessity for us in this age and era. So what that increases have done is increase the cost of telecommunication services, where cost of living is already quite high. And also looking at the sector, the players in the sector bear some of the highest tax among corporates in Nigeria today. For 2021 full year, MTN, the total tax remitted to all government agencies through MTN was about above 700 billion naira, and that also puts them in the top 20 corporate, top 20 taxpayers for that year. So they actually have like a high tax burden on them already, and they're also complaining about high costs, which the players in the sector are in one way or the other trying to move on to consumers. So if you are also seeing that increase in tax also on consumers, that might just be too that's not what the sector needs right now, considering the importance of the service being offered by players in the sector. You note that their effective tax rate is also about 32% for MTN specifically, which is
Yeah.
quite on the high side. So they pay a lot of taxes, and
Okay.
also oh yeah,
Abdul
thank you.
Latif, permit me to button here. We're pressed for time, but wrapping up this segment of the show, let's also look at the attractiveness of the equities market versus the the base load that we also see the fixed income market also appreciate and take on. Do you still think this relationship will still go within the swinging pattern it earlier did last month?
Okay, so while the equities market is known to provide like higher returns for investors compared to the fixed income market historically, we look that there has been like there's usually that rotation of funds when one of the two of them becomes more attractive to investors. So presently, stocks across sectors in the equities market seem quite cheap, but and there's exactly no particular reason, or there's no push for investors. It just seems as though there's no push for investors to come into the equities market at this point. You'll note that we saw half-year results, and even some companies declared half-year interim dividends also, but that also didn't spur so much of buying interest in the equities market. And this is quite attributable to the fact that we are seeing increased economic and political risk in
Yeah.
the economy, and also fixed income yields are becoming rates in the fixed income space is becoming quite more attractive to investors. If you look at both treasury bills and bonds primary market auction, we have seen that increase in rates go on for a while now. And also maybe liquidity in the market isn't as much as we had earlier in the year, especially during the first half of the year. So these factors put together, we have seen two consecutive rate hikes. You note that the period immediately preceding the first rate hike, that's like the end of May, was when we start to see that sell-off persist in the equities market. That coincided with increase in fixed income yields. So that
Okay.
dynamics just proves that what we might see near term in the equities market is maybe some sideways trading,
Okay.
just some bit of
Okay.
profit taking again.